Hi traders. I just wanted to do another video. As I said, I'm trying to do some more regular stuff here and material, hoping that it might be of interest and help those who want to trade order flow. Now, there's just one thing I wanted to show, which I use regularly and I find is useful, and hopefully it'll be for you. So here, if you refer to previous videos, you'll find that I always tend to look at TPO, so market profile here on the left, and comparing it to the volume profile, and see how you know, obviously look at initial balance and opening range and sort of various phases in terms of the market profile, but also compare that in line with the actual volume and try to establish whether we spend a lot of time in a given area, and where we spend a lot of time, such as yesterday here, that's the point of control in terms of the market profile, which happened to be not too far off the volume profile. So have we spent a lot of time in an area, and if we have spent a lot of time in a specific area, then has volume been transacted, and that sort of indicates something. And sometimes you'll find that you've got a volume point of control, such as it is the case here, which is here in terms of the volume. It's a bit of a strange day so far. It's clearly directional, but the point being here is, we TPO point of controls is where we spend the most time is here, where we spend generated most volume is here. So that tends to indicate different things. So either way, the point being, this sort of comparison of the volume profile and market profile is quite useful, and also, again, referring to previous videos, gives us references which we then want to project in the future, and you can easily sort of, as I've shown in previous videos, you can easily project some areas of potential interest. So if you look at some selling tail here, for example, at the top of this profile, incidentally obviously coincide to this sort of very low volume node with some sort of ledges, then you may want to project this forward, and this might well be act as a magnet. And as I'm doing it now here as well, I tend to delete areas which have been filled in. So we project an area, and when we get back to it, once transactions occur and volume is being generated, then a value is perceived to be here, then once that's filled in future, I sort of delete it. Now, the interesting part of that is that's on a daily basis, okay, and obviously you can do that going back in time as much as you want, and any of those projections I have on my charts relate to previous sort of low volume nodes, single prints, ledges, etc., which I have forwarded, traced going forward, and I know that when we get back to those areas, that'll give me a point of reference. So here, for example, we're on a sort of down market, even though we had a little bit of a pause here, and we've bounced a little bit, and the as you can tell now, actually the point of control has moved down here. So this is where this is not quite where we spend the most time. It's still here. Market profile volume the TPOC effectively, TPO point of control is here indicated by this red line. This is where we spend the most time, but this is where we've now generated the most, exchanged the most volume, if you like. So that again explains to me, indicates to me a number of things. But here, for example, when we go down to this 117.20, then to me that's going to be a reference, and I know that if you keep going down at some point in the day, we're likely to go back down here. Similarly, if you look at yesterday's session was here, and those lines are lines had, trace going forward. Obviously, I didn't know what was going to happen during the day, but what I knew is we had an inside session here, inside the previous session, and as we brought that session on the downside, my sort of first initial target was the lowest point, or actually there's a ledge here, but it was the lowest point of that engulfing session. That's the inside session, but that's, it's inside that previous session, so it was the low of that session. And indeed we went there, just there. Actually, on that occasion it was fairly precise, as you can tell, because the low of yesterday was really the low of the day, of that previous session. So all that to say, these are indications of looking at this TPO and volume profile. Not only does it bring some interesting information, i.e. where are we spending time, who's in control, what sort of phase are we in, etc., but it also gives me references which I project in the future, and I find this very useful. Now, it's always good, this is daily, as I said, and it's always good to have the same analysis, not only on a daily basis, but also take a look at it on a monthly and weekly basis. So here, what I've done here, just to explain to you a little bit the functioning here, if I can do all the mergers here. So here we're looking at every month, so it's month by month instead of being day by day. Each TPO and volume profile here is a month, and this is the current month. So first of all, it's a good view because it's giving me exactly the same information that it gives me on the daily basis, except now it gives me obviously the references, so for example, low value value area, so value area low and high in terms of the volume as indicated, TPO VA here, are interesting reference points on any time frame, but certainly something I would look at on a monthly time frame. A single print on a monthly time frame will have probably, again, will act as a rejection or initially, and then, but certainly as a magnet. Same for the TPO point of control. So the volume point of control. So we've got a TPOC here. The VPOC is not super visible because it's all if I expand it, we can see a little bit better. So that's the volume point of control. That's a reference point. TPO point of control in red here is another reference point. So all of those are really interesting. And here, of course, we're going back in time, and as we're going back in time, as we look at the previous profiles, we can see those virgin point of controls being projected. They act as magnets or rejections or various type of things, but same for the low volume nodes, same for the value area high, low, blah blah blah. I mean, all of this is are important points of reference. Now we can see that we're here down here at 1760, and incidentally that sort of correspond to that month, which was in October last year. Was it? Yes. So that correspond to no October. I'm talking rubbish because that's March, February, Jan, December, March, Feb, Jan, December. Yes, that's November. Anyway, point being, this is a previous profile, and the previous profile, and as we've just seen for the daily, on the daily sort of time frame, it does exactly the same thing, but on a monthly profile. All right. So that what's interesting here is, of course, we choose to have a view on the monthly or the weekly, and the same here. If I go in the weekly, get exactly the same principle, and you know what I want to show you here is that it becomes interesting. But here it's obviously weeks, and it is interesting to sort of merge previous weeks or previous month, and you can do it on previous days, I guess, as well. But I think it's interesting when to merge those profiles together to get a real view, a real sense of the shape of the market. All right. So yes, here I can project forward some low volume nodes and virgin point of controls, volume point of controls, market profile point of controls, value area high, blah blah blah. I can do all of that and finish business. You think, you buying tails, selling tails. You can highlight that, project it forward. That's great. Except whether we did on a weekly basis or on a monthly basis, these are just representations of time. Okay, so we obviously tend to do stuff during the day and more than we tend to do stuff at night, at least in terms of work. So we all have a day and night depending on where we are in the world, and we sort of want to put an order into things. So days, hours, minutes, months, weeks, and so on. Now, this is all completely relevant to the market. Why? Because the market is all about value and fair value, and if we are now down to 1760, well, it is because we're looking at the 6 here, by the way, all the time. That's all I'm looking at here at the moment. It's the euro-dollar futures of June. Then that's where the value is perceived to be at the moment, right? Is it because the dollar is perceived to be high? Is it because the euro is perceived to be low? Is it because a combination, it's a pair, so combination of both, conditions? Is it something else? Well, I would say it doesn't really matter at this stage. What matters here is that this is where the fair value is, and this is where buyers and sellers are ready to transact until they're not anymore. All right, until it becomes too expensive for the buyer, or it becomes too cheap for the seller, and obviously the sellers will want to sell as high as possible, and vice versa for the buyer. So there's always obviously a fine line and a balancing act here, and an area and levels, and where this seems to be fair, and that's the fair value, right? Now, value doesn't come with time. Time is completely irrelevant. So here I'm looking at the current week, and if I sort of expand this week, it's only Tuesday, of course, so it's Monday and what's so far of today, and it can show you by every 30 minutes how this is, what's has been happening. So obviously we started the week here, we went down up to that's sort of, and again you can refer and find reasons why, going back in time, we may well have stopped here, we bounced back, went back down here, and back up, and back down, and back up, and back down, and back up, and back down. That's pretty much what a market does, right? So now, what's interesting here is that this is a week, this is the previous week, What I want to do is group all of this together, because again, that's month, by the way, sorry, not weeks, that's month. So I want to have a representation of value and not of, take time, which is a completely arbitrary way to display the market, because we have to display things using time units, but I don't want to do that. So here I'm merging, this month, so far where we are in the month, at the end of the month, and the previous month. And then I want to do that with the previous month as well. So I keep merging with prior profile. So I've merged with the prior months. I don't do that again. And already, effectively what you're looking at here is all those months, including the current one combined. So that as such, that is the same picture, but you suddenly have a different picture, you have a different view. So now what does it start telling you? And yes, you could have worked this out looking at the different profiles, but now it's very, very obvious that we're, right at the bottom of, this month, but certainly right at the bottom of where we've been in the past, 3-4 months here. All right, so that sort of gives me already, it's not that you're looking at different information, but it's like it makes the information more obvious. And of course, well, you can see we were in if you look at the previous month here, we were in a sort of, range. So there was, obviously there's here an engulfing month compared to the previous one, and then the other one is an inside month, and etc. But I mean, we're fairly, it has a top, it has a bottom, and we're working for several months across that sort of, area. So if I keep going back again, and merging, so I'm merging again until and the reason why I'm doing this, I like to do this to have a different view, but I like to do this until I get to the point where there was something radically different in terms of the value. So to me here it has become, and it doesn't really matter when this is, by the way. All right, that's June last year, but it doesn't matter. It's irrelevant. What's relevant here is we were obviously down below, went up in value, so all the way here, and clearly further up here. So there was a real shift in value, if you like, and that's where I find interesting to stop. And then obviously I could merge forever like that going back, but to me that's when there is such a shift in value, then it becomes interesting. So here we've got all the same thing. We could sort of merge them together. You can see here there's a much bigger session, and then a change occurs. So there's a shift in value occurs. We go all the back here, all the way, up here, and then now within this profile. So if I was to do this now, I'm going to take the whole screen, but the point being, there we go. You can see exactly what I'm saying to you here is that we shifted up. We had a contract, and by the way, the one thing to bear in mind, we had a contract change here. So there's this jump, but the fact we move contract and the contract expires, we move to the next expiry, doesn't yes, the contract has a greater value because as you know, the closer we get to the expiry of the contract, the closer we get to the actual price of the underlying, in this case the actual euro-dollar spot, right? But so that hence this big gap, but we quickly, so that threw, if you like, in the air this sort of the value, if you like, because we had a new contract. So the new contract has a greater value, yes, but the real value of the euro-dollar in those times, it went up a little bit, was quickly corrected, and now we're back where we were, right? So what I like to look at here is really when there was a shift in value. Well, I like to display this, and I like to take a look at it this way. So here you can see there's a like single print. There's a TPO point of control. There's the high of the value area in terms of the volume. There's a whole bunch of things, and actually the volume point of control as well is pretty much where the time point of control was. So I know this is like huge, this is long term, and I know we are only here at 1757 as I'm speaking now. But I wouldn't be surprised if at some stage we sort of filled in all that huge low volume nodes, bounce back on those TPO prints. Probably before that, fill in those sort of, buying tail. Bouncing on value area high, etc., etc. So these to me, and I don't suggest we're going to go here and soon, but this to me is something I will pay attention to. This I will pay attention to. This I will pay attention to. Therefore, I've got this yellow sort of area, which I'm very happy to have displayed on my chart, and to me that makes it ever so more obvious because I've merged all my TPOs like that. And when it comes to, I'm not doing this as we're still in March, but next week, or this week even, the day after tomorrow, when we move to April, then I will start drawing, the my areas of interest and project them forward from this combined profile. And I find this really helpful to have a real view and longer term picture of what's really happening in terms of value. And then I'm doing exactly the same thing on the weekly side. So here, sometimes I'm looking at weeks where clearly areas should have been sort of updated, and I have not. But anyway, I'm taking the opportunity to do this now. Now, why is this interesting as well on a weekly basis? Well, exactly for the same reason. I can see if I look at the weeks that obviously we had this change in contract, we had a gap, so new contract had a higher value. We didn't go that much further up. We corrected, went back within where value was left. Had another little bounce, and we back in within what effectively was value with the prior sort of contract expiry. So again, I like to merge this profile, so current week with previous week, even though this week is not very advanced yet, and etc., etc. And again, as you're doing this, you can see you get, again, just as we did it for the month, and you can do that obviously for the days. But my point here is just more look at I guess the message I'm trying to pass on is ignore the concept of time frame, because and do that and try to have a good look at value, because time frame is only arbitrary and something we decide. So if I look at weekly and you look at monthly, and somebody else looking at quarterly, somebody else looking at a daily, we're all going to see, well, effectively the same thing, but in a different way. So important points on or areas or weekly, daily, monthly are different, right? So if you look at different things, then is it really useful? Well, probably not. What is really useful is when we look at value, because value is common to everybody. Okay, time frame, we may all be looking at different time frames, but value is value, and value doesn't. If you want to buy a car, a house now, depending where you are in the world, it has a certain value that is not dependent on time. Well, it is in some degree, in the sense that value will evolve with time, but at this point in time the value is X. That has nothing to do with the fact that it's whether you look at it every day, every week, or every month, the value may well still be the same. Okay, so now you see I've combined all of those weeks, and again I've got an interesting view, and when we move on to next week, then I can start projecting going forward, and I can say, well, here that's something I want to project going forward. And you may want to say, well, and I'm just doing this very roughly, by the way, at the moment. It's just not I'm not trying to be very very sophisticated here. Obviously there was something here which was more on the actual the weekly side itself on a single sort of week, etc. So you know, so and you can do that here. So well, here I think for whatever reason I want to highlight this. It's a low volume node compared to the rest of the profile, etc. etc. So you get the gist. You know, but I find that this helps, you know, quite a bit. To do that as well as doing it on a daily profile. So it is probably a good idea to project those, combine those weeks and months together, have some sort of reference points which, you know, which are relevant because they combine so much data and give a much better stance in terms of value and get rid of this sort of you know, time frame notion. And get a better sense of where value is, and you can do that as well. I mean, from here I wouldn't necessarily combine this, but as I said, we see the shift here, so I would start from here and merge with the prior one, and here I do it again, I do it again, and until and again, where would I do this until, you know, well, until I see a shift, and the shift was here, clearly you can see it, right? All of this is same-ish, all right, and again, I find this is useful. So obviously you don't have to find it is useful because I find this is because I find it useful. But my point here is that it could well be something you could look into and explore for yourself. Again, whatever I'm passing on here is just, you know, I've been trading for 12 years now, so there are things which you feel work, and this I feel, you know, in addition to doing all the rest, obviously, and still do it on a daily basis, but I find this is useful, and if this is useful to me, it may well be useful to you. So that's something you want to be exploring. But again, Sierra charts, and I'm not advertising for Sierra charts here, that's what I happen to use, but it's fairly good for that, and I like this sort of, you know, so here you see I've combined some weeks, and obviously it has the shift here, that's why I didn't combine these two together, but I could do it, I guess. Alright, and you can keep going this way, but see, the point here is that it gives you, you know, a perspective which is slightly different, and now we're looking at a value and we can see that we're here at the moment, and, you know, for example, going weekly, so going to 116.755, which is happens to be a value area high, and it also happened to be the volume point of control of that week here, and it happens to be as well at the top of a sorry, at the bottom of this sort of, you know, buying tail. It's not really buying tail in the sense there's no tail per se, but if I was to make it a little bit more precise, then suddenly low volume nodes and lower volume here, and there's tiny buying tail here. So, you know, all of this again gives me references which, even if we're far from those, you know, areas or points or references or at the moment, is something I definitely want to keep in mind, and gives me you know, a better view of how value is evolving. So that's it, guys. I just wanted to share this. I hope you find this useful. Again, the purpose of my videos here are not to I see a lot of people offering, you know, various kind of stuff and training and you know, material and opinions and etc, and to make money. I don't sell anything. I just pass on what I do. I you know, I trade, and I'm passionate about it, and I guess I've got slightly different. I look at order flow and use order flow components, but I don't necessarily certainly don't scalp, and I don't, you know, care for too much granularity in the sense that I like to do. I would define my trading as position trading. So, probably slightly different from what you may see, and the way I look at a footprint, or the way I look at, you know, Mary math lines, or the way I look at the market profile, volume profile, all those being sort of order flow components. But I don't necessarily look at it in such a granular level, because I have a way to trade which is more, you know, across several days or weeks, or, you know, not so much weeks, but certainly days. So anyway, hope you find this useful. If you've got any questions or whatever to share, any ideas to share, free stuff, so don't hesitate, and I wish you a good day.